Realogy made its public debut today at the New York Stock Exchange under the ticker RLGY. And with me right now, Chairman and CEO Richard Smith. You got the IPO price above the expected range. Bet you're pretty pleased with that.
We are. Of course, that's not our focus, as you well know. Our focus is on running this company and creating the value that our shareholders expect, but clearly we're very pleased with the outcome.
You know, lately the market's been getting some pretty clear indications that the housing market is on an upswing. But is this recovery real?
Yes, in fact, we did not react in the same manner back during the housing tax credit. We were not as convinced when the builders were convinced late last year. But this is a sustainable recovery in part because demand's outstripping supply. And it's outstripping supply at a time when one would think that the macro environment is not terribly supportive of a housing recovery. You've got high unemployment, you still have some macroeconomic headwinds, but in spite of that, housing is clearly growing. It's up 14% year over year, and average price is starting to increase, which is a very important aspect of a recovery.
Is business still a ways off from, let's say, the years during 2006 and 2007? Are your broker franchises now returning to those levels? Are you seeing that?
Well, listen, happiness is low base. So we are recovering off a low base, and we're seeing it in virtually all segments. So our franchisees are starting to enjoy the benefit of a recovery. Our company operations are doing the same. And you got to remember, for the past 6 years, they've been reducing their costs. They're far more efficient. They're going to be profitable much faster than they would have been otherwise. So as a recovery becomes more robust, they're going to be the beneficiary, as will our shareholders.
What regions here in the U.S. are you seeing real pockets of strength?
What's important about a recovery, you need to see it in all markets. So that's actually what we're seeing. In a downturn, every market's painted by the same brush, which is down. In a recovery, it reverses the norm. The norm is what's customary. And you literally return to location, and all those characteristics that drive real estate values. So we're seeing a recovery in virtually every market. If you were to talk to the average broker in virtually every market in the country, they'll tell you this is better than any market they've seen for the past 6 years.
Okay, so what are the hottest markets to buy a home in right now?
The coasts are always very important. If you were waiting for the Florida prices to decline more, you've missed that by a couple years. Actually, from a unit volume standpoint, Florida is about flat. You're starting to see price change, and it's not going down, it's going up. So Florida is a very important market for the obvious reasons. The coasts are very critical to a company of our size. New York has a substantial demand, not enough supply. Price is still under a little pressure, but this is a very hot market.
What about Nevada and Arizona? Those were two hardest hit.
Well, the units are up substantially in Las Vegas, so you're seeing a lot of increase in unit volume. Price is still going to have to start appreciating before you see a real recovery in Nevada. But Nevada today, Las Vegas in particular, is far better than it was 3 years ago. So it's slowly making a comeback.
Okay, Richard Smith, so thanks so much for your time.